Good morning, one and all, and welcome to this morning's video. So this morning I have three pairs on watch, and those are Euro Yen, Pound Kiwi, and Dollar Swiss. I haven't made a video for a little while because I've had some things in my personal life to attend to, as well as my fiance having stage 4 cancer. My dog has now been diagnosed with cancer as well. So anyone who thinks that psychology is not important, well, I think I'm proof that it is, because I still show up. I needed a few days to sort some things out and to come to terms with this, but I still show up regardless and do the things that I needed to do. And people might say, well, psychology is not important. Okay. So what happens if you scale up to quite a large account size and then life hits you with things which you're not emotionally equipped to deal with? And then you go from trading £1 million account back to nothing. Okay, what do you think that's going to do to your psychology? All because you didn't work on it in the first place when you needed to, because you thought to yourself, okay, well, I'm okay from a trading perspective. Well, even if you are okay from a trading perspective, are you mentally equipped to deal with things that life may bring your way? Okay, that's a question which probably a lot of us can't answer until we're in that situation. But the best thing to do is to prepare yourself in advance to make sure that you stand the best chance of being able to do so should life bring such challenges your way. Okay, I've always known that I was very strong mentally, but nevertheless, I have done things since I started trading to improve my psychology. Okay, and I think that they stand me in good stead. One of the things is use of language. I've studied a little bit. Or I've studied a little bit on neuroplasticity. I would advise you to Google that if you haven't already. And one of the easiest ways I find to deal with big challenges is to not use negative language, certainly out loud, when you're thinking about smaller things like people complain about the weather all the time. Okay, what I found that is if you do things like that, if you complain about the little things, what you're saying is the little things control your life. So when the big things happen, it becomes harder to deal with them mentally, and also you're more likely to speak aloud what you think about your bigger problems. And what I find is to just not give things the airtime. Okay, obviously you have to talk about big problems, but don't give them any more airtime than they need. Okay, and if you do that with the little things, I find it easier to do that with the bigger things. But anyway, let's get into the technicals now. Okay, so Euro Yen, if we just zoom out, we have this, what according to my data is an all-time high. Okay, we come up to that area. You could argue we got there structurally, okay, because we have that structure there with the middle section. We break above and we catch people the wrong side of the market, which is what we typically see. The amateurs buying the highs, while the professionals are seeing this on the flip side as a discounted price for a sell. Okay, you even see that 1, 2, 3 move there. Then we have the impulse correction, and I'm just looking for potential further continuation to take out potentially in the long term this low that this low near miss to, and this low which this low near miss to. So the more of these near misses we have, the more likely it is that price will gravitate back towards those areas. Similarly, on the flip side, you can see that we left a gap to this high. And also, if you really want to scrutinize it, you can see that this high left a gap to the retest at the back end of the previous structure. And not only did it leave a gap to the retest of the previous structure, but it was also a sharp move. So if there's a sharp move down followed by a sharp move up, and we near miss to it, we're likely to come back up to that area, because the sharpness also implies that there's a lot of liquidity there. If we just zoom in a little bit, you can see there's the gap, okay? And we have a bit of a base now. So we have this structure here, okay? We have the 1, 2, potential 3 leading up to that area. There's my area of value as denoted by the AOV. When we zoom in, what do you see? You see a reversal structure. You see the same repetitive patterns. So we tapped into this area. Yes, there was a sharp move. That was a very sharp move, okay? But note that was one candle as well. So when we get down to an area in one big candle like that, that can often imply that this was just volatility. But regardless, we tapped into that area. People would have started selling there. Many of them would have been too zoomed in, and they wouldn't have realized that there was actually a high sat just above. So they start selling. Price moves down correctively, most likely because people are selling this whilst the orders that are still up here and being placed in in that area are dragging price up, which will likely, nothing happens all of the time and nothing happens none of the time, but will likely give us this 1, 2, 3 move to complete this reversal structure. Okay. So with all of that in mind, what I'll be looking for is the following. If we just zoom down to the 1 hour, you can see the structure a little bit more clearly. Okay, I wouldn't be surprised, just because there's no inflection points really on the left, I wouldn't be surprised if we get a bit of an expanding pattern where price taps into the low and then pushes up. If there was a little hook point there, then maybe we'd tap into that and then push up. So I wouldn't be surprised if we get something like this. But regardless, what I'll be looking for is the following. I'll be looking for a tap into this area, followed by a 1 hour impulse down below the area of interest. I have started incorporating the 4 hour entries, which we've been taught to look for within the Falcon community. If you're watching this on TradingView or on YouTube, we have something called 4 hour mastery. I've started incorporating these. In this instance, I won't be looking for a 4 hour risk entry from the top, just because I don't really like the idea of potentially retesting the back end of this, just in case this ends up being a running channel, okay, where we retest the back end of that, and then we get something like that, and that acts as the base for the retest of the back end of that, and this running channel to push higher. So in this instance, I won't be using that, but I will be using it with regards to one of the other pairs that I haven't watched today, and I'll explain that as we get down to that. So in this instance, I'm looking for a 1 hour push down below here, and then either a 5-minute continuation or a 15-minute. And then in this instance, I would be managing this down to, as denoted by that path tool there, I'd be managing this down to this low. Okay, you can see we have that little hook point there. So I would set a take profit at the 90% area, where price can often pull back deeply, even if it continues in the forecasted direction. When we get to the 90% area, price has a habit of pulling back about 50% of the move, or it can do, before continuing. And obviously, from a percentage perspective, now that I'm a funded trader as well, that would mean that I would be leaving about 5%, 4 or 5% on the table. So my max threshold is about 3. I might push that. If the structure denotes that I should leave a little bit more room, I will sometimes push that to 3.2 or something, just slightly over. But as a rule, I don't leave more than 3% on the table, and that would give me 4.5% down to the lower of the structure, roughly, and then down to that area about 9.5, 10%. So that is euro yen. Let's move on. I've got an alert set below the area of value. If it does not trigger, I don't need to check this trade. No need for FOMOing in early. So on pound Kiwi, we have this high here. Okay. Now notice we tapped into the area, but we didn't break above it. On the higher time frames, typically we do break above if we're going to move to the downside. We don't usually just tap into it like that. But no, that doesn't mean to say, even if we do that it's going to happen straight away. We can use structure. We can see we have a daily structure here. We can use this as a potential structure for a move to the downside. Okay, if price starts to commit below this high here. Okay, and maybe the reason that we haven't broke this high is because maybe this is, if you notice that we moved up a lot more impulsively than we moved down. Okay, we've got a correction here, whereas we didn't have anything like that on the left. So maybe this is a push down to break these lows, to then push up to give us that, to then break the high, and then we get more of this structure, and then this becomes the middle section, and then perhaps we push down from there. So we don't need to, even though the high up here hasn't been broken, it doesn't mean to say that it's going to be broken straight away. And one of the things I like about it is that we have, regardless of the fact that we didn't break that high, we have broken this high, and we got there in the form of a reversal structure. Okay, so on the daily chart, you can see that we have this structure here. We have that kind of 1, 2, 3, the middle section within it. Okay, there's a chance that we could move up to that high, but I'm not so concerned about that at this moment in time, because if we just zoom in, this high is actually above that low, and that low as well. Okay, you got to think about what people are trading. They're trading support and resistance. A lot of them will believe that this is now resistance. Okay, so this becomes less relevant. We have the 1, 2, we have the tap into that area. If we just zoom in a touch, How did we get there? We got there in the form of a reversal structure. Now, one of the things I am paying attention to is the fact that we have an ending structure, we have a move up which has very little structure to it, and then right at the end we get the ending structure, the psychological patterns, where we get the first touch, the middle section, and then the third touch. I am mindful of the fact that the second touch, when we get these reversal structures, usually the second touch doesn't tap into the area of value. Okay, so you got to think about what's happening here. If the second touch does tap into the area of value, then potentially this has already tapped out. This touch here has tapped out some of the liquidity, so the chances of this moving to the downside decrease slightly by virtue of the fact that the second touch of this structure already tapped out some of the liquidity. So when we move up to the third touch, there's potentially less liquidity here than there previously was, because of the fact that the second touch has already tapped out some of that, if that makes sense. The other thing which kind of ties in with that is the fact that we have this bullish candle here. So the rejection candle was bullish like that. So we may be coming up to fill this. Okay. Every time we do that, we're potentially tapping out a bit more liquidity that was sat above, which makes this less likely to move to the downside. Okay. But what I'll be looking for, the higher time frames override the lower time frame price action. So what I'll be looking for is one of two things in this instance. I'll either be looking for a 4-hour entry in this instance, so a solid 4-hour rejection, and then I would look to get short either on the break of that or using a limit order, using the rules that have been dictated within the what do you call it, the 4-hour mastery content on Falcon. Or I'll be looking for a 1-hour impulse down followed by a 5-minute or a 15-minute continuation as illustrated there. Potentially this candle has wicked out enough of the liquidity. This might just be orders coming in after that liquidity has tapped out for a move to the downside. We shall see. Okay, I'm not going to guess. So what I've done is, there should have already been an alert on here. Whoops. So I'm going to set an alert there on the fly to see if we can start to impulse down to give us this entry. And what I've done with regards to this entry is I've set a Google Calendar, or I couldn't remember whether I'd done it for a sec, but I've set a Google Calendar reminder to remind me to check this at 9:30. So the next 4-hour candle would close at 10 a.m. UK time, and it is currently 5 to 7 in the morning. So the next one would close at 10 a.m. So I've set a reminder to remind me to check this at 9:30 to see what the 4-hour is looking like. And if it's just, if it's just up here, then what I'll do is I'll reset. I'll set another Google Calendar reminder to remind me to check this at 2 p.m. or 1:30 p.m. just before the next 4-hour candle closes, and then we'll see what price is doing at that moment in time. Okay, so that is pound Kiwi. And then last up is a little bit of a hedge play, which is dollar Swiss. So on this one, okay, so the DXY, the dollar index, looks like it's positioned to go higher. We've broke above these lows. Okay, we had this little reversal structure, and then we've moved out impulsively. And this to me is looking like, we just studied this a little bit. This to me now is looking like a bit of an M style pattern. So we had this, there was a potential that this could commit, right? But we had this kind of little hook point there with the 1, 2, 3 into it, and price did not find enough liquidity to send it to the upside. So this now is looking like consolidation, which ends up tapping into this to retest the back end of all of this volume to potentially give us something like this to go long. Okay, so if the dollar index is going long, that makes, especially when dollar Swiss moves in alignment with it to a large extent, it makes anything on dollar Swiss a little bit more risky. Okay, so what I'm looking for in this instance is, so you can see the other clue here is that you have the near miss up there, but as I said, nothing gets filled straight away. You can see we are potentially moving down. So what I'm trying to do is I'm potentially capitalizing on a reversal, the end of a reversal structure, to tap into that, because we near missed to this low to then give us a move to the upside. Okay, if that was to occur, you can see that if we just zoom back in again, what we potentially have is because we have this 1, 2, 3, which taps into, there is a area of liquidity on the lower time frames, and so we have that which taps into that, and then also retests the back end of that, which may be why we're seeing a move to the downside. We have retraced over 50% of the length of the previous daily candle. That is a tick in the box. As we drill down, we had a bit of a corrective start to the move. That's the first clue that this might not be ready to commit. Okay, then we come back up. If we just look at this on the, that might be another clue as well. This this candle here, we're getting these kind of bullish 4-hour candles, and this price action is not what I would anticipate if we're going to move to the downside. Okay, so a corrective move down followed by a sharp pullback. These sharp pullbacks in themselves can often be an indication that this is not ready to go. Okay, so what I'm looking for in this instance is I'm looking for a little bit more confirmation. I won't be getting involved in, certainly with the DXY looking the way it is, I certainly won't be looking for anything like this. It taps into that by way of this structure, because you could easily by this point you've lost the impulse, as they say. Okay, so we only got there in one candle like that. We've had a more corrective move down, and this whole correction by this point will be wider than the impulse down which has preceded it. In fact, the impulse only started there. So what you could end up happening is you get tagged in, tagged out, and then price does that, and more in keeping with what the DXY is doing. So what I'm going to be looking for in this instance is the following. I'm going to be looking for I'm going to be looking for a push down. Okay, it's an impulse down, so the second continuation, as it were. And I'm going to be looking for a 15-minute continuation, not a 5, to mitigate the chances of me being tagged in and tagged out like that. And then what I would do is I'd be able to manage this down to this low. And the reason I would set a take profit there is because we measure the range. You have that sharp move sat just above. Okay, so that is where I would set my take profit. When there's a sharp move just above the 90% area, I set my take profit at the sharp move and not at the 90%, because that tends to be where price can pull back deeply, even if it's going to continue in the forecasted direction. So that's my forecast, folks. One thing I do like is that finally, TradingView has allowed me to use the whole screen on TradingView. Previously, it was only letting me, I had to get in, I had to include all my little tabs and things, which I have on my web browser, but now it's finally letting me I don't know if you know what I mean, maximize the whole TradingView screen rather than showing you all the other little things that I've got on my computer. But regardless, I hope you've enjoyed this video. I hope it's provided you with some value. As I said, psychology is important, and I hope my coherent thought process throughout this video has showed you that no matter what's going on in your life, if you work on your psychology, you are mentally equipped to deal with all of this stuff. Doesn't mean to say that it's easy, because none of us are robots. Okay, we're not cyborgs. We all have emotions, but if you work on your psychology, you should be well equipped to deal with anything that life throws at you. And I think that's a thought that I'd like to leave you with. But for now, have a great day, and I'll speak to you in the next video. I won't be making one tomorrow because I'm taking my dog for his CT scan, but I will be back most likely on Thursday with another video. Have a great rest of your day, and I'll speak to you again soon.